Hi everyone, my name is Vendik and you are welcome to the channel. So we are going to take an intensive class, all right, on market, on price action. So we are going to cover almost everything from price action, starting from market structure, liquidity, we'll talk about institutional candle, entry types, we talked about imbalance, premium and discounts. I believe these are actually the basic things you will really need to know when it has to do with price action. Okay, so because of most of my students, all right, that are still in class currently, so I will use this medium to explain this thing, all right, so that you get to understand how it is. Okay, so let's start from market structure. Okay, all right, when we want to talk about forex trading, okay, and then price action as a pattern of trading, market structure is something you can overlook. Okay, something you cannot overlook because it is actually the structure of the market that actually introduces you to the price and what the market is going to do. So we'll take most of the examples, all right, of what market structure is. After that, we will explain in details on how it looks on a real market. Okay, so let's say that we have an impulsive move upward. Okay, we have something like this. We have another one. We have a retracement, and we have another one. Okay. Um, okay, this is a serious. Okay, this is a market structure that's okay. So this is what you will be looking at. Okay, we have a bullish market. We have a bullish market where we were going to call this a high and we call this a low. All right, so we have a higher high, and we have a higher low. We have another, we can have another higher high. To have another higher high, we have a higher low, have a higher high, we have a higher low, have a higher high. Okay, so this is what makes a bullish trend. All right, so if you have a higher high and a higher low, have another higher high and higher low, okay, it simply means the market is uptrend. Okay, the trend is up, right? We have an uptrend. So there are some situations if you have a lower low and a lower high, another lower low, a lower high, okay, a lower low, a lower high, a lower low, okay. In this market condition, it is called a bearish trend. Okay, this is a bearish trend. Okay, we have a bearish trend. Okay, you have a you have a lower you have a lower low, and then you have a lower high. All right, you have a lower high. So continuously having a lower low and a lower high gives you a downward momentum. So this is how market is formed. This is how the structure of market is formed. Okay, so with this you can know the basics of how market is formed. Okay, so market creates a higher high and a higher low, a higher high and a higher low if it is moving upward, and then if it is moving downward, it creates a lower high, a lower low and a lower high. Okay, so that is basically how market is formed. All right, so okay, let's take another example and then explain this in details. Okay, we use this as a symbol to represent the overall market. Okay, but this is not actually how it looks like when we are looking at it on a real market. So in a real market, you will have something like, okay, You have something like a lower low. Okay, let me put a serious impulsive move. Okay, all right. Okay, okay, let's say something like this. Okay, in a real market, we are looking at something like this in a real market. So what you need to know is that when a market moves up, okay, towards the retracement form, it's not just going to come down very straight like this. Okay, so in a smaller time frame, you have something like this. You have something like this. In a smaller time frame, you have something like this before the overall movement. All right, the same thing, happens here. You have during any form of retracement, okay, market chubby around, did a whole lot of things, okay, so you tend to see this before the market moves. So this is how it normally looks like on a real market. Okay, so market don't just go straight. All right, so if you are looking at the bearish momentum, it's just an invert. Okay, you invert this particular stuff that I just explained. Okay, if you invert it, it becomes the bearish of it. Okay, so that's basically how market looks like on a structure. Okay, let's try and look at it on a real market scenario. Okay, a real market scenario, because I explained something. I said when market is doing, okay, I explained something and I said when market is forming a lower high and a lower low. Okay, when market is forming a lower high and a lower low, it doesn't just go straight. So there's some sort of a confusion that happens if you are just using your eye to look at it. Okay, so the more you practice, okay, the more you get to know how these things really works. Okay, the more you practice, the more you get to know how it really works. So let's take this particular zone. For example, let's take this particular zone for example. All right, let me zoom in. Okay, so we were saying if market is bearish, okay, if we were saying that if market is bearish, we will be having a sort of a lower high, a lower low. But if you look at this in a real market, okay, it's nothing similar to what I draw. Okay, it's not even close. Okay, it's not, it will not even look like what I draw. But if you are looking at it, okay, I can still draw that particular stuff on this chart. So we break structure here, we had a little retracement, we break structure, okay, we have another tiny retracement, we break structure again, we have retracement, we break structure, we have retracement, okay, we did not break structure. Okay, so anyone that you did not break structure is considered invalid. So this particular point was not valid. Okay, so this was what this particular one was valid. Okay, and then the retracement was very small, and then we had another one here. Okay, so if I should take my drawing off the original price, okay, so this is exactly what you are looking at. Let me change the color. Let me change the color so that you will see what I'm trying to say. This is a lower low, this is a lower high, this is a lower low, this is a lower high. Okay, we form another lower low, a lower high, a lower low, a lower high. Okay, we form a lower low, a little retracement, and then from here we are looking out of a reversal. Okay, so this is what it looks like in a real market. Okay, it doesn't really looks like that particular structure that I was drawing very clean. Okay, very clean upward movement. So it doesn't really looks like this. So you'll be looking at something like this one. Okay, so this is what market always do. So okay, for you to be profitable, all right, so you really need to study retracement area. All right, you really need to study retracement area. This will really help you to understand how market structure works. Okay, just study the retracement area. Okay, study the momentum area. Okay, where you have more impulsive move, okay, tend to be your retracement area. Okay, like all these big institutional candles, All right. I know that if you're a beginner, that will sound so strange to you, but this is how it is. Okay, so we have a downward move, a retracement, a downward move, a retracement. We now do change of character. We did not hold, we retrace. So ability for you to understand price action, okay, per time, okay, will really help you to stay away from some certain trades that will hit your stop loss. Market structure moves in two ways. It moves up and it retraces. So what you should study more now is how to get yourself into the retracement zone so that you can continue the trend. Okay, so before the end of this series, you will understand more when we get to imbalance and entry types. Okay, so I believe with this explanation you should be able to know how market moves. So another thing is that market moves in a range. Okay, so if we're having impulsive move, okay, let's assume we were trading upward. Okay, let's assume we are trading upward. Okay, so this particular move, right, let's assume we're trading upward. This okay, this will be our swing low, and then we will have another one, a swing high. Okay, at this point, this is the swing high we have. Okay, so this is our retracement zone, and this is the high of that particular swing. All right, so if market break this particular, if market break this point, if market break this point, okay, if market break this point and then create another high, another swing high, okay, and then we wait till after the retracement, and we immediately we if it creates another swing high, so this become our trading range. Okay, so if this one breaks, if this other retracement breaks this previous swing high and form another swing high, okay, so our swing low will move to this point. Our swing low will move to this point, and this become our trading range. Okay, so each time market does this, okay, your trading range change. So that's another thing you really need to look at when you are looking at market structure, because what trading range means, it's at your trading range you have your discount level and then your premium level, okay, where you get to the market. So when you are on your range, you will need to find where to get into the market on your trading range. Okay, so this is basically how market is formed. So if you look at it on a real market, okay, let's assume this was our movement. Okay, let me take this particular point as an example. Okay, let me take this point as an example. Okay, so let's say this is our market on a real time. This is our market. We have impulsive move upward, we have a retracement zone. Another impulsive move upward, we have a retracement zone. We have another impulsive move, we have a retracement. Okay, and then so on. So this is in a real market. So what you do is that this is your swing low. Okay, and this is your swing high. This is your swing low and this is your swing high. Okay, and this become your trading range. Okay, you understand, this become your trading range. So immediately the market broke this particular structure, okay, broke this structure and create another swing high. Okay, your swing low move to the previous swing low. Okay, to the new swing low, sorry. Oh yeah, your swing low will move to the new swing low, and this will become your trading range. So what happens is that you will start looking at your discount, okay, from this particular range you are trading. So you look at where you can get into the market when the market is retracing so that you can join the trade. So that is how market structure is most. Okay, in the next episode, we'll be talking about liquidities. Okay, I will try as much as possible to document the whole of this series so that anybody that wants to go into trading and it chooses price action can just go through this series and then understand the next move, okay, of his career. Thank you very much and see you in the next episode.